morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting the lab today. Can I please get a screen and audio check in YouTube and the Bookmap Discord TraderLab community chat? Yeah, thank you very much. Well, good morning, everyone. This is the Trader Lab. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time. This stream's about integrating Bookmap order flow tools with auction market theory and volume profile using structured trades in the intraday developing time frame. The Trader Lab is about building the business of trading, and it is not a follow the leader kind of thing or plug and play or an imitation scenario. It's actually an educational platform, if you will, for developing traders to learn market mechanics, how the market works, why it does what it does, and how using structured trades that I share in the Discord TraderLab chat, how you can reverse engineer and actually establish your own trade plan. If you've been in this business for a while, you've probably noticed that in your travels, you'll see the one thing you need and only do this and only do that. And that's really kind of nonsense. What traders need is to understand market mechanics and then back into it a plan that aligns psychologically with themselves. In other words, your mental state. It's like dancing. I always think of it kind of like a dance partner or playing a musical instrument. Once you understand how it works, then you find your rhythm with it. Some traders are short-term oriented. They're just looking for shorter rotations. Other traders put a trade on and they're going for the range for the day. And for some of us, trying to hold a trade through the whole day might be problematic. And for others, they don't want to be bothered. They just want the range. Over time, how do you know what's the better thing for you? Well, there's two pieces. One is statistics and getting comfortable. And the other part is your emotional wiring. Some of us are a little more chemically oriented, a little more action oriented, a little more dopamine oriented. Others are more risk adverse, so less trades. All of this comes into the mix. That's why one size doesn't fit all. So the Trader Lab is about helping you identify not only how the market works, sharing structured trades with you so you can identify how pieces might come together. And then the real business of trading is not what we do here in the live market. It's what we do outside of the market to have a trade plan. A trade plan is really required, in my opinion, in this business, because otherwise we're just gambling. And what a trade plan does, it eliminates, or shall I say, reduces random interaction. What it does is it defines where and when you might interact. In other words, specific conditions. And then if you've done the work, you'll know that under those conditions, when it shows up, that you have a statistical probability of one outcome over the other. Now, why is that important? It's important because gaming or casinos operate exactly the same way with a really successful business model. So if we already know there's a successful model out there, and we don't want to make it up and think, are we going to get lucky? Maybe we can create our luck, just like the casinos do. The casinos are lucky because they only play games that have a statistical edge that favors them. Does it make sense that maybe as traders, we only interact in the market with the other participants when we have structured trades that favor us? And just like the casinos, we accept the outcome of the next interaction with the other participants is random. It's really the basis of our business. That's what the Trader Lab is about. That's what it's built on. And you may find if you're waking up doing the same thing and not getting different results, that it may have nothing to do with your energy, your intent, your motivation, or your desire for success. It may have to do with your process and your beliefs, believing that this business is predictive when in fact It is random. And that is something that all of us have to come, I believe, and again, it's just my personal experience, that we all have to recognize what we are actually doing in the business we're in. You might be designing a solution that is not aligned with the business you actually want to have a career in. Just a thought. And grab a pen and paper. I have always to give you a few notes, and then we'll get into the real-time trade here. What happened this morning, and if we get anything in real time, we will, as I like to say, observe it. General disclosure: all Bookmap Ltd. materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. I'm watching something here. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room. There's plenty of those out there. This is for educational purposes. This is to help you build your own business. Your business, not somebody else's, not imitation, not push the button here, do this, do that. That's nonsense and a waste of your time, because all you have in this business when you come to it is time and dollars. Nobody has unlimited time. Nobody has unlimited capital. Unless, of course, you're one of those exceptions, and then call me. We'll talk. But for the normal, regular, the rest of us who have families, obligations, and everything else, it's a battle against time and stress and our obligations and our ability to persist. So maybe the TraderLab can help you understand the business of trading, how to put together a trade plan. It is not complicated. What it is discipline to come to TraderLab, pick out one structured trade, and as I like to say, make it your trade slave. Learn one, and you'll learn a lot, because the TraderLab is about helping you create a template of process. And once you have process, you can plug pieces in, and it's almost plug and play. But unlike your software toolbox, and I always use the comment, well, why would there be 100 indicators in a software toolbox if you only need one or two? The reason they're all in there, in fact, if you look now, there's probably more like 500 or 1,000 in there, or different derivatives of them. Why? I don't use any indicators. Not saying you shouldn't, but I'm going to say, why? Think about it. Why? Why do retail traders buy these toolboxes and spend the limited amount of time and resources they have trying to find the right time frames, the right indicators, the right mix, and loading everything on there to create certainty when there is no certainty? Why do they do it? I believe, it's just personal, not a recommendation, that they're misinformed. But that's just me. And why would I say that? I'm just going to tell you. I was misinformed. When I started in 1980, there was nobody doing this. There were not very few off-floor traders. All my friends were down on the floor at the CBOT CME. So they thought I was out of my mind. And I didn't know anybody who was doing this. Unlike you guys today with the internet and every expert on the planet, when I started, we didn't have that. You either bought a book or you went to some high-priced seminar, and then you just hoped you got something out of it. It's no different than chat rooms today, except you don't have to jump on a plane and spend your evening in a hotel. Okay, naked volume point of control. Let me give you some statistics. Grab a pen and paper, write these down. You'll see how this might play into this or might not. So we are opening higher inside of yesterday's range. Let me just show you. So this is the RTH open. We're inside of yesterday's range. This is yesterday's settled, so that makes it a higher open. Yesterday's low, okay? ETH low. So we have a couple of things here. There is approximately, this is called the previous point of control. It is where the highest volume was yesterday. The market has a tendency to come back and check those. Why? It's like shopping. Think of it like retail. And the reason we have a market is it's trying to figure out what something is worth. Well, yesterday we found a price that was too high, and the market sold off. Well, today, this was the highest volume from yesterday, and if we open below it, we can come back and check it. That's called the volume point of control. And here's what's interesting. about a 67% probability you might do that. Past performance not indicative of future results. All statistics quoted must be vetted by you. The ETH high, 69% probability. We'll check that out. Huh, isn't that interesting? The overnight volume point of control. What is these? Now, don't let the terminology bother you. It's all available in the PDFs in the Bookmap Discord TraderLab community. It's all available to you at no cost, as well as the community. The ETH high, lost it, 69% probability. So 69%, so you can see we got high probabilities of getting here. Overnight volume point of control, we had 82% getting there. Not a reach if we're opening there. Then we have the overnight mid. I know you're interested in this one. What is the overnight mid? Let me find it. 72, almost 73% probability. Previous settle, which is my current target, not a recommendation. Who knows? Let me find that one. And then you'll have the stats, about a 69% probability of getting here. So you see now, before, so those are the stats that are in play. But here's the other piece. Let's look at this. This is the ETH, pretty much the whole thing, other than this this little amount I just added to it, because it's full session. But what we had in the ETH was rotational trading. The ETH volume point of control, that yellow line in the ETH, was right at that high volume area. Think of this like shopping. It's really a consolidation, but it's really shopping. Because what is a consolidation? Shopping. What's too high? What's too low? Retail. And what the market does is it does this. It rotates, okay? That's called balance. And what balance is basically the market's just sort of, would you please pass the mint julep? You know, it's like this. So if we know we're in balance and we're sloshing, that is suggesting that it's two-sided trade, and at the moment the higher time frame might not be active. It's going to be us and the algos kind of feeding on each other. You know? So, however, if you look at this, and one of our traders in TraderLab pointed this out, that this looked kind of unfinished up on the top. You'll notice how it tapered at the bottom and then the volume came up higher. So this is suggesting at the moment the market spent less time down here because there's less volume. If we come down and we leave an area, it might mean it's too low. Might. Now, where's too low? Don't you wish you knew? I don't know. So I don't know. So what I know is I can come back to yesterday's low and the ETH low. But in the meantime, where am I opening? I'm opening right on top of balance. There. So I'm opening right here, which is my fair price. Now, this is important because if I open here, then I can anticipate slosh, because that's what I already have. What do I have in the ETH? Slosh. And I call it slosh. If you guys have ever been in the Northern Hemisphere, when we have snow, we call it slush. Slosh. So now here's something I wanted to mention, and it's not a trade. Let me just see, am I missing a level? Hold on a second. 3050. Yeah, this. This is the ETH high. This is the naked volume point of control. Now, right here in the ETH, and I posted this in the TraderLab, and I didn't take it. I looked at it and I said, this is a short. And it is. Why? Location. Why? And I didn't take it, but I want you to see it. Because if this is the fair price, and I come outside, now it's the ETH high, so, for mere mortals, including me, not so much, but it has location. Remember, this was the retail price. Let's look at Bookmap. Let's just see what we can see. I posted this and I'm thinking to myself, you get that thing that goes, oh, you shoulda. Well, I don't, you know, not necessarily. So it's not in my plan to take this trade going when I'm this close to the RTH open, because we could get a lot of volatility. So I want the open to happen. But I saw the trade and I was going, that's interesting. I should mention this. So let's look at it. Here's micro high volume structure. And what's most important, at least for me, and that's just a way to look at the market, is the auction. This is too high from yesterday. In other words, the retail price. If the retail price in the ETH is here, and I come back, now don't forget, this was happening over here, okay? So this level here is too high from yesterday, maybe. And now we put in the high. That's what was so hard about this. I see the liquidity. I see the buyers here. I see a selling iceberg. I see the break. That is my key element. There's the seller. This sets up a short, which again, no short. But let's look at the behavior. Now, I'm coming into the RTH open. How am I going to use this? Let's take a look. So in my mind, mentally, I have a short, okay? And where's my potential target? Well, none of this is here yet, so it would be the overnight mid. Now, it's not, but I'm just showing you structure. So let's look. Market opens, 8:30 Central Time. Let's watch. So here's the RTH open. Here's the opening price. So right here, market opens. Let's look. And by the way, if you have questions, please post them. So in theory, this is too high. So if I get involved anywhere, this is my outside edge. Also, this has a high probability of getting tagged, except I did this. I have conflict here. Now, we had conversation in the TraderLab this morning about maybe not taking a short and waiting, which is fine. But let's look at the short. This is called a variable high volume node, or HVN. And I have a process. It's very simple, because I believe simple is very good in trading, because complexity creates thrashing, ambiguity, conflict, and because what we need, I believe, to make decisions is a minimal amount of inputs. That's why I don't use indicators, because I used to. I built systems, and what I found over time was, why was I doing what I was doing? I had to really step back, and it seems pretty logical, Well, I want to make it better. What was I trying to accomplish? I wanted to be more certain. And so I thought more indicators and more confluence, if you will, of different things, different time frames would create more certainty. Actually, it had the opposite impact for me. It created more conflict and more randomness, and it wasn't measurable. You can't measure something that has a lot of variables. They absolutely have to be exactly the same to measure. And the gaming industry just plays their games the same way. They don't, blackjack just has 7 cards. They don't have 10 sometimes. They don't, they just do what they do. That's our model. So I didn't understand that at first. I like to mention this because now this is too high. This drops down here. This is now the retail price. This is too high. Where is the potential target? It's here. Now, I don't have a trade here. I can't do anything. Okay? So the trade was actually set up out here, but no bueno, So nothing to do. Let's watch it. So this is retail. When we come across, then I'm going, what's the condition of the market? Possibly it's going to be what's called two-sided trade, because that's what we had in the ETH, balance. And it's a nasty thing. It's called mean reversion. It's my least favorite condition. Let me show you how this works. So I'm sitting here and I'm looking at this and I'm going, well, if we were directional, this would be a short. We are not directional. We are rotational. So I'm very careful. So I'm just sitting here going, I'm still mentally back here somewhere going, that was a good short. So my brain is not here, it's back there. However, I'm here now. So I have to get my brain retooled and go, okay, when I come across, I'm in rotational trade. So I'm thinking, okay, I have to find an outside edge. Let's see where it might be. Overnight mid. Now, the overnight mid was the targeting for that trade from the ETH, which I had no entry here. So I have nothing. I have nothing. Not saying you couldn't sell the mid, but when I come across here, I know this is where this is resistance for me. So if any trades I put on here, because I had this urgent selling, I know it can come back up here. So I just didn't get involved here. Now, let's watch. So now, here's what I know. Let's come back. We have the naked volume point of control above us, which has not been tagged in the RTH, so it's still an open target. We have the ETH high, has not been tagged yet in the RTH, potential open target. What did we do yesterday? The Acapulco cliff dive. What did we do yesterday? We were long in the morning and then short, going in, after the market started turning the barge around. What do I know is too high? Here. So let's watch. And what else do I know about this? This is the opening swing high at the time, which I think might be right here. Let me look at my chart. Hold on a second, guys. I think it was 29.50. Can you guys confirm opening swing high was, doesn't look right though. What was the opening swing high? Yeah, thank you, Stephen. Can I get a opening swing high? I just want to make sure I got the right price here. These things will get covered up. Yeah, good morning, Tex. Good morning, Dennis. Jamie, thank you. 29.25. I have IB high over here. Is that correct? Oh, that's right. It is right. 29.25. Okay. Okay. Thank you. Okay. Now, this is important. Why is it important? Because this is the opening swing high, which it looks like it's up here. So this doesn't look right to me, but I'm going to take your word for it. Is that correct, guy? Oh, 28.25. Aha. You guys. Sorry. All right. Sorry about that, everybody. Just get rid of that. All right. So this is important right here because there's going to be buy stops. This is too high. So now I'm looking at this and I'm in what I can. Now, right here, it's not that you can't sell this, but it's where your risk is, because what can happen here is it could just come over here and then squeeze out this leg. Okay. So I just wait, and I post this in the TraderLab all the time. Guys, patience. It's like a bus. There's always a bus coming by. So you just have to wait for your trade. So I couldn't trade in this here, but I was looking to get short. And the reason I want to get short is I have high probability target here. Okay. And I also know I have high probability targets up here. So I know I can go either side. So when I put the trade on in mean reversion, which is outside in, I have to get risk neutral because this is my least favorite condition. You'll see why. I got to look. Hold on a second, guys. I got to look and see where I was trading this morning. I haven't done a lot here today. Just not a lot. Where was it? I'm looking back at my trade, so I just want to. I want to be sure I'm. Okay. So we come outside. This is the overnight volume point of control. Okay. This is the opening swing high. Now I know from brutal experience that the opening swing high has stops. I also know that if somebody gets long out here somewhere, wherever it is, that they're going to target the opening swing high. Why? Because they're going to, just in case we don't take it out, we might get selling. Why? There were sellers here before. And what the market tends to do is come back and we might get those sellers again. So if you were on the long side, for whatever reason, per your plan, you might, underline, take profits ahead of the opening swing and maybe hold, going for these statistics up here. So when the market comes up here, I'm not looking to sell it yet. So watch it. See what we get? So what you get is this to here. This is mean reversion. Pull out, mean reversion. I have no trade. I'm just sitting here going, what am I doing? What am I doing? I'm waiting for that. So I'm sitting here just going, and I'm thinking when I see this, and this is my target for my shorts, I'm going, come on, and all that stuff runs through your head. Oh, maybe I should have sold it. Maybe I should have sold it. Yeah, right. No, maybe you shouldn't have sold it. Maybe it doesn't matter. Here's what matters. Getting this out. Because right here, now let me show you a couple of things. We come up here. I see my sellers. I'm looking at the buyers and I'm seeing them, but they're not impressing me. I'd see them. I'm seeing absorption here. I'm seeing selling icebergs. I'm underwhelmed. Here's my opening swing high. Now, here I see my buyers. 119 buy stops. What do we anticipate? Stops. And who would the stops be? The early sellers. Now, when we come back above, and I'm conscious that this can be a problem, okay? Because statistically, these are on the hip parade. 70% probability-ish here, and let me find it here. 69%, almost 70% probability to get here. So I'm looking at this, and this makes it questionable. Of course, they're all questionable. But what else do I know? If I pick the opening swing high, and this is part of thinking in market mechanics, if I get my stops out and I have no buying above it, all we did was squeeze. And then if I run out of buyers, because the buyers are stops, not initiators, then I can come here. So I took my short. And I posted this in TraderLab. Here. Actually, sorry, it was here. I'm sorry, gotta get this. 934. Yeah, it was this one. So we had this one. This could be a short to here. I didn't take that one. We got this one, and I had the absorption. I knew there was something. So I have the buy stops here. I have absorption here, and there should be probably an iceberg somewhere. Yeah, here's an iceberg here. So this liquidity came in the book. Let's go back over here. You notice where we are here. We're in thin air. So, and I was looking at this one, and we came right up to the opening swing high. This is a valid short to here. I didn't take it. I don't remember why I didn't, but I took this one. And the goal was to come back here. To there, and then I'm going for this. So that's the trade. This one I posted in the TraderLab. I don't call trades. And then I got out. Okay? I posted that. Now, what happens when we come up to these targets with the higher probabilities? What do I do here? Do you think I do anything different? Absorption. So these buyers, you see this liquidity, iceberg selling, absorption, buy stops. Where's my buyers? Watch now. Sellers, micro high volume structure. This is fractals. We can discuss this if you want. This sets up another short. Watch. Where are we here? So your goal then is to attempt to come back. So we'll see what happens with this one. You have to get risk neutral. And the goal, now this can do anything, right, guys? It can come up, if it comes back over here, then we have another target here. And I've posted early this morning in the TraderLab. It's not on this chart. 35.36, I think it is. This is called the low volume node. It's from yesterday. It's where we broke down, and that was the last distribution, the outside edge of the last distribution that we failed from. And if you guys remember in the stream, I was on shorts yesterday from this area, 35. So 35 is kind of a resistance zone. So this is really the outside of the whole enchilada, and it's in alignment with all this. So this is an area for potential shorts. It's not a trade recommendation. The idea is to come here. Now, the market can obviously do anything. It can continue to push out. And then if we come up in here and we don't get anywhere, we can pop it. And if we come back, not a recommendation, it sets up a short back to here and wherever, and the wherever is part of the joy. But today, the potential is to be two-sided. Now, right now, we've taken out the initial balance high, which under different conditions might be a long. For me, it is not. Doesn't mean it won't be for somebody else. There's no right or wrong in trading. For me, I'm only trading outside in today. So far, unless things, all of a sudden, happy days are here again. This is a short in the TraderLab. Can everybody, now look at your questions. Thanks for your patience. Trying to get myself oriented here. How we doing? How's everybody in TraderLab? You're visiting TraderLab. Welcome. If it's your first time here, just want to let you know this is a open, no-cost community of traders. It's a environment, no nonsense, serious, get down to business environment for those who are interested in building out the business. It's not a video game, and it's about longevity and career building. It requires you to do a lot of work, and a lot of us are looking for somebody else to do it. Plug and play, the only indicator you need. This one thing, blah, blah. Yeah. If I go out on YouTube, I just fall out of my chair because everybody now, with Instagram and all this, there's a bazillion experts out there. I'm going to tell you, I'm not an expert, but I do have experience. It's going on 45 years of trading both professionally and, of course, now like you. And when I started, there was no day trading. It was just the guys on the floor were, quote, the day traders, the scalpers, We didn't have algos. We didn't have domes. We didn't even have volume. So it was really different. But today, everybody with the internet, so you guys have probably, it's kind of like going on a pilgrimage. You've gone through many different chat rooms and gurus and all that. So that's not what the TraderLab is. The Trader Lab gets its strength from its participants who bring their collective experience. We've all done the same thing. But when you're in this business, we tend to operate under a rock. Nobody understands this business. I mean, think about when you try to explain what this is to somebody. It's really impossible because they can't relate to it. I mean, the fantasy of trading versus what it really is quite different, isn't it? So the Trader Lab, we understand there's reality to this business. It's a hard business, and it's hard not because trading is hard. And I believe anyone can learn to trade. And if you come to Trader Lab, I think you can learn to trade. Whether you can trade has nothing to do with what you learn in Trader Lab or anywhere else. It has to do with you and what you hold on to and your ability to be flexible and change. Because we come into the business with really a fantasy. And then we're going to try to fit this business into what we imagine it to be. Well, the reality of the business is quite different from what we think it is. I know it is, or was, for me. And it took me, unfortunately, a long time to stop persisting with a defective process and understanding that what I was doing, despite intention and perseverance, did not work in this environment. And that was pretty important. How do I use CBD? Hey, John, will you send a pizza already? New York pizza, John. Chicago pizza's doesn't, believe me, they don't know what they're doing here. Just a pizza opinion. John, by the way, is in the John Doe, which I think is a terrific moniker, is in the pizza business. John, send a frozen pie over here, will you? But thin crust only, thank you. This is microstructure here. It's aligned here. If we can't get out above this area, which we might, or this, you see this, all this here? This is, now this, for this to go lower, we've got to obviously come here and rotate. If we can't get back under here, then we're going to continue higher, which is fine. Nobody knows. So there's nothing about knowing in this business. This is my outside edge. So when I put today together, I post, and I do this in the morning early on, and I am going to answer the question about CVD. I know what my levels are. All these are on the chart before the open. These are related to yesterday, and then the ETH, which ETH being the most current auction. And these levels adjust during the day as necessary. So right now, I'm seeing so far the buyers still are hanging in here. You see the sellers here being absorbed. So it looks like we may squeeze these guys out. Let me just look over here. So there's nothing really to do here at the moment as far as trade goes, because out here is your outside edge. So it's two-sided. Mean reversion is an outside-in trade and is mean. My least favorite condition, and the reason is, where's the outside edge? What about this? Is this it? Is this a short here? What about this? What does that do? Is this a short here? This was absorbed. This is too high. This is absorbed. If I can't get over here, then potential to come here. This is mean reversion. And let me look up at the CVD question so I can answer it. So these are theoretically, and these aren't recommendations, because I'd like to throw something at, throw a shoe at the monitor, except that gets expensive. Hard trading. So in the Trader Lab, your choice is really either don't trade it or wait for really the really nice locations. And then like any trade, the outcome is random. You're trying to do is get under this swing, and back here where the retail traders keep their stops. So if you got short, you got to try to scale in front of the VWAP. And then if we get under the VWAP, then you get the mid, and you might get a rotation off the mid. So you might get a rotation here, you might get a rotation here, or you'll never get there, and then you'll get squeezed. I'm still seeing buying here. That's absorption. What we need to do to go lower is to get under these buyers. And these are icebergs that are buying. So when you see an iceberg, what you need to be thinking about is who's going to overpower whom. Just because there's an iceberg executing here, if they're in their limit, okay, so that's passive. It's the limit order book. So when the selling aggressors come into limit buy orders, they're passive. So they get eaten up. Now, if I get below them, then that means there's more selling pressure than these buyers at the moment. So I'm still seeing the absorption and I'm still heading for a target. You see? So this is outside in and it's conflicted. And what you're seeing is two-sided trades. So the fact that there's a iceberg buying here or buying over here or selling over here, it's two-sided. That in and of itself is not a priority of inputs. It's good to know. I know there's buying here, even though I can see the selling. Who are the sellers? Sell stops, market orders. That's delta. What about these guys? Passive absorption. It's a very tricky area. So if you're sitting short, you got to be on a very tight leash with this. And range becomes very important in mean reversion because you need the distance from entry to where the first layer of zone of stops will be, which is here, to get risk neutral. So when I'm looking at a trade, I got to look at, well, I got to scale before 26, so maybe, 26 half. Where am I getting in? On my best day, I'm probably getting in at 29 half, so that's like maybe 3 points. I can handle that. But look at this absorption. So we want to take note of the absorption. Let's watch what happens. Now let me look at the CVD question again. Hi, John. CVD, well, RP, the way you can use CVD, which is the delta in mean reversion, I'm going to see the same thing. For example, here is a buyer, delta. That's the green bubbles. Green bubbles up here, green bubble there. Okay. And now there's some bubblage here, bubblage here. So these are buyers. Now buyers buy stops. This over here is my delta. This just shows me that the aggressors were here. An aggressor doesn't mean I want to buy it. It could mean I'm getting out, right? You see, so in and of itself, but for me, I don't prioritize this. I prioritize levels because the auction, for me at least, creates these levels. The delta is kind of it's tertiary, but when I'm coming up into delta, what I want to be thinking about is what is this telling me here? Let's think about this. If I have buyers up here and I get below them, and let's assume, sure, there's buy stops. That's what this is showing us. And they're selling icebergs. That's what that's showing us, the absorption. And I see my buyers here. Why am I not going higher? That's what we don't see is the absorption. Because for the market to have buyers and to stop means that there's a passive seller on the other side. So if I come below this level, it is suggesting that it was buy stops, not initiators, and potentially there were initiators and they are under the potential bust. That sets up the short, which is what this is, you see. So that's how I use the delta. I'm looking, but it's a confluence of pieces. But before the delta ever happened, I know the context, which is short. Now, not a recommendation. When I mean by short, I mean rotational trading, outside in trading, outside in. So in this condition, I am only trading back to here, but I have to scale in front of this. This is the current trade I am referencing in TraderLab. and I posted this in TraderLab. Actually, all I've had today is short, so I'm just saying. Doesn't mean, by the way, you could be long too. You know, it's not the point. The point is, how do you trade this condition? And do you know that most retail traders try to fit the market into like a one size fits all? And the market doesn't operate that way. It's actually conditional or contextual. The context is rotational trade outside in mean reversion. And if you're in the TraderLab, you have a separate plan for this. You're not trading the rocket ship here. You're waiting patiently to get longs in here who have stops here to get exhausted, and then you're looking for them to get thrown under the proverbial bus. So that's why you don't want to trade with them unless that's your plan. For me, I want to trade back to where their stops are, VWAP and mid. And then what's the mean? There. If I get under here, what's under here? Stops. Where am I trying to go? This is the same trade from this morning. Here. That's a trade. Not a recommendation. Now, this is just, you sit back and you wait. Do we have the discipline to not engage in here? Here's how you develop that discipline. You have to recognize the condition of the market. Remember, there's 60 PDFs of structured trades that are available to everyone at no cost in the Bookmap Discord TraderLab community, in the chat. The first part is what qualifies the specific trade. Where does it fit? Where doesn't it? There are some days in this market we'd be getting long here for continuation higher. There are days like today where you're not getting long. You're only trading outside in. Do you know the difference? If you have a plan for this, you're not taking this. I'm not saying you can't, but for me, I'm only doing this, bang, bang. And then I'm basically surfing the stops. Where are the stops? Under here. Why do I want to get short? Because I'm under here at the moment, which was too high. My settlement is here. Yesterday's retail price, which is maybe too high, is here. If the shoppers won't pay this, where might we go? Here. And now here. Mean reversion. Any questions on mean reversion? Jamie, location. It's like real estate. How do I handle distribution walls? 3125. What's a distribution wall? What is a distribution wall? Are we talking about, what are we talking about? This? Are you talking about this microstructure here? Is that what you mean? JT? Yeah, KC, restart or smack the side of the TV. Okay, let's look at this. I'm getting a question, and I don't know. You were mentioning, I think you said liquidity wall. How do you read handle distribution walls 5035? There's very little volume above it, and then at the wall volume 503125. Okay, let's look over here. Absorption, those are sellers, buyers here. I come up, I get my seller. This is micro high volume structure. Let me show you. Good question. So we have this, right? Now nobody knows. You know, we're all clueless, so don't worry about that. These are the targets coming up, remember? Wonderful thing. I'm going to draw a line for you. And this is really a good way. You guys should be doing this to help you learn to see the structure. So right here, I have my buyers and I have my absorption. Where I have my buyer here, this is microstructure. I have my alignment. And then, of course, who knows? So my volume is here. I come up. Where's my buyers? I got buyers there, and I got buyers here. I got my seller here, okay? So my sellers are here, stuck. We had seller there, run over. Thanks for playing. Sellers again here, selling icebergs. And these are all suspects and location. Remember, real estate. Now I have my chop. And this right here, right in here, you can see the chop, chop, chop. Consolidation. So break high. There's a seller. Notice the depth of selling anywhere else other than here. Where's the change in behavior? There. Now I see that, and that's a change in behavior. There's more range on this sell. And these guys are parked up here. 126 buy stops. Thanks for playing. And remember, absorption here. So these buyers were absorbed. Now I'm putting pieces together with the location. Now let's come back to the fractal. I call this trading in fractals. So I'm looking here, and I have my volume in here. You could see it. It's sitting here. It could be a little lower. It could be a little higher, but it's this general area in alignment with this. There's my change in behavior, and now it's a suspect. Watch. This is your over-under area. See the volume here? You see the selling here? Where do we want to enter? On a pullback, subject to your ability to keep yourself, from losing your mind. What did I have here? A buyer. This liquidity interacted here. So I break, I come back. I have buyers here, seller again, buyer here. This is where this trade fails, here or here. Watch. And there's your mean reversion. That's your location. This is where your trade fails. That's the short. It's called mean reversion, and you're going here, 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 and maybe out the bottom. I got to move something here. Hold on a second, guys. Unfortunately, I am multitasking, and that is frightening for all of us. If you know what I'm saying. Okay. So let's look at this. VPOC migration. Now we're in two-sided trade. Very annoying trade. This is still my target, not a recommendation. This is the same trade, So I'm only short. You can be long. You know what I mean? That's the beauty of trading. We can all do our same thing. And there's no right way to trade. I mean, you could be TraderLab and only on longs today and having a wonderful day. I can just be on shorts today and just have a wonderful day. And either of us can have a miserable day, and we can both be doing the same thing or opposites. It doesn't matter. The thing about TraderLab is you will find what speaks to you in the market. This is the mean. So this is where you would scale. This is the mean, and then it's trade management. Here's the possibilities. Come here, come out, and squeeze out these guys. So the way I play this is I go for my targets. Risk neutral's job number one. Now, in mean reversion, since it's rotational, you cannot micromanage it because it's this kind of thing. If we get below here, then it puts the opposite side, and this down here is the target. And I have more targets, but for me, we could take out yesterday's low. We can 55.05 is the next target, by the way, in a higher time frame, not a recommendation. Doesn't have to do it, and it doesn't matter to me. This is my target here. That was the target from the earlier short, right? So it's same trade, different location. Back to here. And the reason for there, statistics. What else am I going to work with? It's all random. 69% probability. I tagged this. Well, I didn't get it. This is the current low. So I'm going to go for this. And I've got to manage this thing and be willing to give the MFE back, or run tight management and let it take me out. This is where trade plan comes in. I hope I answered your questions on this. I hope it's useful. Please give a thumb up if you're visiting on YouTube. Always nice. And remember, with options, Jamie, if you are having good days and quote bad days, it may be context specific. You might, and I don't know what you're doing, but the condition of the market changes. So plans need to be specific to the current context, which is what we're talking about here today. For me, it's only rotational trade today, outside in. I'm not doing anything else. And I knew that coming in today. And I posted all this in TraderLab. Not that that means anything, because I'm like everybody else. I take stops. I want to hit myself with with a 2x4. I make mistakes because I'm human. But I do know if I can define a condition, I'm going to use the plan that's aligned with the condition. I'm not trading yesterday. I am trading the current condition of the market in relationship to yesterday. And I know the market can do anything, but the plan is specific to rotational trade for today. And you should come back to, I think you're in TraderLab, Jamie, I don't remember. But in TraderLab, all the posts before RTH open, and I think I started at 7, whatever it was, to start posting about the condition of the market and what the plan might be for today, which is rotational trade. And then it's rotational trade. So if you're trading this like yesterday's trade, which, then you might have a problem. And you may give it all back because you're not in alignment. When I started trading, I'm just telling you about me. I'm not saying this is you. I thought I could fit the market in a box. I built trading systems. And the trading system, the idea was that over time there was enough a repetition in the market that all these trades statistically, and it was really more a conglomeration of math that was integrated and optimized. So it was like, well, over time it'll all shake out. But what it didn't. What it did was it would degrade, because today's condition is not yesterday or the day before, or Friday. So, or Thursday. So each day is unique, and they overlap on what happened previously. They also overlap on what didn't happen. So what happened, what didn't happen? What's the condition today? Where are we in relation to yesterday's RTH? What do we know statistically? We have yesterday's low. We have the ETH low. Is this a good low? Not in my world. Are we going to take it out? Not my job. This I know has a probability. And I know the longs have their stops under here. I know that. So as long as I know that, and because we're two-sided, I want to be short. I want to go for this. I want to get the longs out, and I want to take this. And when I say I want, I don't mean anything. It's the stats in the condition of the market. So, Jamie, you need to look at why you're having the experience you are today. And that's all of us. Is it our plan? Is it our discipline? Are we making it up and impulsing in? Are we letting our little indicator tell us something that may have nothing to do with the current condition of the market? And that's what most retail traders do. And I'm not speaking specifically about you here, Jamie. I'm saying we all, and why most retail traders have a brief experience in this business, because they don't understand the business. That's the point of the TraderLab. I have a order sitting, as you guys know. Not a recommendation. And then that trade's over for me. This is what the market offers. That's kind of what the deal is. I've got this liquidity in the book. Here's your choices. You exit ahead of it, or you're going to hold for a little more, or you're going to manage your trade. This is how you can use Bookmap. And what do we anticipate? There's a sweep, absorption, and the behavior after this event is important. We're going to watch it. I'm looking for this, and I'm now distracted. And this is the short. Hold on. This is not a trade recommendation, but this is a trade I've been talking about since we started the stream. Right? This is called mean reversion, and it is rotational trading. And you can learn this, everybody, in the TraderLab. Now, you have to vet it. You have to understand it. There's a language to the market. The market is not your indicators. It's the other way around. Your indicators are a reflection of participant behavior, but the behavior is, the condition is not the same. So the fact that something in a running market works, I gotta. Hold on. Sorry, guys. I'm going to. Hi, John. Let me just take care of some. Yeah. I'm just kind of managing the pond moment here. See the behavior here? Check, pull back, check. So now this is important right here. Watch this level here to observe, not a recommendation. It's important. If you come to TraderLab, there's 60 PDFs you can download. This is specifically identified in those 60 PDFs as a behavior. You need to understand it to have an edge over other traders. Now, it doesn't mean today anything, because it's all random. It means there's behavior we might associate with this, and then we want to see what happens here, right there. Now, here's the possibilities. Come here, come back here, or next, or down. Now, I know anybody can say it's going to go up or down, but you know what's important? What happened here, not the fact they can go up and down. Let's watch. Not a recommendation. Now, what it is for me is a potential here trade management tool, because I understand behavior. This is what we do in TraderLab. This is where I'm trying to go. And I'm looking at this thing right here too. Why are they sitting here? So, right here. And if it comes out above here, that's fine. Doesn't matter. Just it comes down to next. So we'll see what it does. Not a recommendation. Everything is random. The next pick is random. I can't predict anything. And but psychologically, that's kind of what we want to do. We want to know what's going to happen next. The casinos would love to know if the next hand's going to be a loser. They probably would say, we're taking a lunch break, and they'd close the table for 5 minutes. They don't know either. So they have to take each hand and accept the random outcome, just like we do. And over time, only play games that have an edge. Now, the thing about our games is they're structured trades. The other part about structured trades is they only qualify for certain conditions. The outside in mean reversion trade, but this is a target, and it's just ahead of this. I'm looking at this right here. Not a recommendation, is to know which trades are appropriate for the condition. You ever talk to a market? Like, come on. Absorption, I'm flat. Not a recommendation. Anybody get flat. Market could go to zero. Who knows? Why did I get out here? And it can go lower, and it's not my trade is over here. Actually, 2 ticks ahead of it, but that's okay. Trade's done. Can you guys understand why it was a short? And if you can't, I'll be glad to share it with you. Why this is a short to there? And is this a trade? This is TraderLab. Does this work for you? You know, it's not perfect. It's not pretty. It's trading. You know, what are you going to do? It is what it is. So the stop was here. So you could be short here, and this is the better short. Hold on one second. Questions on this trade. This is TraderLab. So how many trades do you need a day? I'm not in this for action. I'm allergic to it. Been there, done that. I used to be a high volume trader, 50, 100 trades a day. Why? No wonder my broker would send me that case of sirloins and ribeyes. You guys ever gotten a gift basket from your broker? I was going to buy a membership for that because I could lower my costs. I was trading, and it was all NASDAQ, by the way. So I'm just saying. But today, I've adjusted. I've adjusted because my risk for this trade to get to here is the same as trying to be a little getting in the minutia. As soon as you start keeping statistics, you'll realize that you're not in the business of action. You're in the business of patience and only taking trades that have range. How do you get paid in this business? Not by risking whatever, 2 points or 3 or whatever it is up here to go to there. You're risking 3 to come to here, 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 and there. That pays. I think it pays pretty good, actually. Certainly did today. Are you guys tracking? Is this making some sense? This is what we do in TraderLab. Now, if you're looking for action, no action. Not the business we're in. Is this a long? It could be, but this is your target. We are in two-sided trade. So the thing is, this is the target. So right here, if this is your target, and there's your absorption. These guys are trapped. There's your buyers. Here's your pullback. This is the target, not a recommendation. I wouldn't take this. You're going to say, why not? Because I have kind of a short leaning. For me, now this is very interesting. You could trade both of these. There's nothing says you can't. Where was my better opportunity? It was here because of where the mean is. Where's the mean from this side? It's over here. So I've got to scale ahead of this. So my range, unless I want to get long here, which subject to my skill, maybe, could be get long here, and I got to scale ahead of this. That's not a lot of meat on the bone. If I come across here, then I'm going to come across here, and this is my next obstacle. So we'll see what it does, okay? I would not take it. It doesn't mean you shouldn't. There are many traders in TraderLab that'll take a long. But here's the thing. Are you going to take a long here when this is the scale and your stop will be under here? Risk reward. Doesn't matter what happens. Or if you are going to take the trade, can you enter here under the IB so you have more range because you've got to scale ahead of this. So this is about trade plan. Now there's two pieces to this, guys. One is market mechanics. This is a structured trade to come here. The other piece of market mechanics is what qualifies the trade. The auction is the auction. This is what we're looking for. I mean, and it's always maybe, and that is mean reversion. This short from out there that came all the way down here, structured trade. This coming back up here is a structured trade. The issue I have with it, and again, this is something you guys figure out. I'm not doing this for action. I'm doing it for edge. So if I get in this, I'm really using a shoehorn because I have to get risk neutral before this in case I only rotate and then continue lower. So I'm telling you, and this is where you decide what to do, not me. I'm here to share with you how the market works. I'm here to share with you an understanding of the business. I'm also here to share with you what it means not to take trades that may work anyway. And what is the prerequisite? In a trade plan, we need to understand how the market works. That puts this as a potential trade. We also have to have enough range to get risk neutral from our location. So I can't get long here because I got to scale. Where is this thing? 20, what is this? 22 half? So I have to scale at least 22. I wouldn't be scaled, you see? So I'd be sitting here now, my teeth would be chattering. I'd be making a visit to the dentist because I'd be chipping them. My emotions would be yelling at me. So that's why I don't take the trade. And by the way, this thing can come and take out the high of the day, in theory. But what do I know? Too high, too high, too high, IDF, statistic, maybe too low, maybe mean reversion. That's all I know. So I can't take the long, even though it could be a fabulous trade to come right back to here. So there. Those are the targets in this trade if it works, actually. Not a recommendation. Can you see the logic of why maybe? And by the way, I would take this long if I had better structure here, more range. So I don't have a trade, so I don't know what to do with this, except I'm done with the no longs. Is this logical, guys? Does this make sense? Jamie, you've been trading what, about 1 1/3 years? Is that right? Do I set my range? This is what I start with stats because there's some sense of probability, because that's all this is a business of probabilities. But what supersedes statistics is the condition of the market. In other words, a priority of inputs. And this, I covered this in my primer webinar. It's available to everybody in the Bookmap Discord TraderLab chat community. And it's pasted in the up on top of the chat, along with the 60 PDFs of these structured trades and a library of webinars. And everybody ought to come to TraderLab. It's an open community. There's no cost. It's serious. It's not romper room. It's very much about business. And the thing about TraderLab, you're welcome. You can kind of see what goes on here in TraderLab. I don't know if you can see this clearly, but questions, charts get posted if I can find them. Here's what's going on. What about this? What about that? Trades. Somebody got to sell. Questions. Everybody's kind of doing their thing, and there's a lot of plan. Why take a trade? Why not take it? What did you do? What did I do? What did somebody else do? All kinds of stuff is going on. This is the community, and a lot of sharing and leverage. The idea at TraderLab is to leverage our collective experience. We've all done the same things, right? The thing about it is, can we do better together and leverage it, And that's really it. I'm trying to look at what time. Oh, this is 9:20. I was going to go back to the beginning, this morning where I posted all this stuff. Observe the open, RTH LVN 35 above, We are in balance with what might be early pop higher, not wreck. Be patient and balance. Two-way auction. Manage your FOMO. You have all day. Anyway, just saying. I'll get this out of the way so we can look at the market. But this is all before the market starts and opens in the morning. And by the way, I don't have a exclusive on doing anything right. There is no such thing in trading. You always think it's who's a good trader, who's not. Well, you're only as good as your last trade, and you're only as good as the probabilities that you have vetted. That's as good as you are if you actually follow your plan. The ability to follow a plan is generated from statistics, not from the outcome of the last trade. And that's really a differentiator. That's how the casinos are able to keep playing their game. Even though gamblers walk out with suitcases of cash, they don't change the game. Remember, right? So my trade for me was done here. Now, here's the question. Psychologically and emotionally, what would you feel right now? I can tell you what goes on in my head, but I've really learned to recognize it for what it is. Here's what my head is saying right now. You should have held it. Really? No, I shouldn't. Why? Because if I had more runners, I would be holding the next tranche, if you will, or the next grouping of runners. Based on my trade and the statistics, this was a high probability trade. Now let's look at the previous low. 37% probability. Now that doesn't mean I suspect we're going under yesterday's low, because of what? Context, not because of statistic. This is a target down below 55.05. This has been sitting on here and it's got moss under it. And you guys follow the stream, we've talked about this. In fact, we talked about if we got under 55.20, this was the next target. And if you remember, we came down to 55.20, had a big rally off it. Then it was yesterday that we came down and took it out. That puts this on the hip parade, higher time frame. So if I had more contracts, this is my target. We'll see what it does. But what do? I just trade the trade, traded by the number of contracts I put on, and I trade towards statistics, and I leave the rest for somebody else. It's not my job. But I'm okay with this trade. How many of these do you need a day? I think I've had 2 of these. Yeah, 2 or 3. So I'm done here. But if I had another, let's just say more runners, I'm managing this, and I'm going to the next statistic, which is this down here. And it doesn't have a probability. It's context oriented. This is the highest volume in the consolidation we broke out of on that, which was at 55.20. We came to 55.20, took off from it. Yesterday we fell under it. Now what? Yes. Maybe, not a recommendation. Can you guys see the logic of how the market might operate? And I always say might because who knows? Jamie, I'm not sure what you're saying. If you went over your trade idea, as in my idea flat out against the trend line short, if I was told it's not a dumb idea, would have stayed in. Well, who's going to tell you whether or not it's a dumb idea or a smart one, Jamie? First of all, there's no dumb ideas. There's only gambling. All the ideas are good. You can't believe how many ideas I've had over the years. Going on 45 years, I've had so many ideas. I don't remember them, thank God. But what seems like a good idea may be completely random behavior. And we see patterns. I talk about this a lot because we see patterns and we think, oh, this is good, whereas maybe it only works 30% of the time, but there's a pattern. But if it's a loser, You're not going to, well, if you knew it was a loser versus just seeing a repetitive pattern, you might not trade it. I mean you, I mean the collective you. That's what the business of gaming is knowing where this edge is. And the randomness, this is random. Where the edge lies is not, but the outcome is random. Notice where we came. So what do? Well, if I'm running my runners and this was my last target, then I have a choice. Where was it too high? Now we can come all the way back to the mean. This is what mean reversion is. So you just have a stop on this thing. And if I was running more from up here, it still would be, it would pay. All right. It's just the way it is. So let's look at this. Micro high volume structure right here. Liquidity coming back in the book. IB, there's stops sitting here and here above this swing. Stop can be here. This is micro structure. There's your break. Here's your test of the micro structure. I'm going to show it to you. Just give you something to think about, guys. That's all this is about. Let's think together. And let's think in how the market works. This is your volume. There's your break. So this is a potential short, or a retracement is a potential short. This might be it right here. There is no precision. Remember, this is trading. Horseshoes and hand grenades. The buyers got stuck here. The sellers took over here. So right here, the sellers were in control. Here, you can see it. We had absorption here. We got below it. We come back. I see the buyers here. I see a seller there. There's absorption. And I come back to here. Now, no precision. You could be selling this if it's in your trade plan. You could sell this. Your stop goes here. You could sell this. Your stop can be here. Not a recommendation. And where do you got to scale? Ahead of this swing. Ahead of this micro volume right there. So you got to be looking to get risk neutral. So do you want to take this trade? I don't know. See, this is scalpy to me. The problem I have, of course, is range. This I can deal with. In fact, this is called the IB continuation trade right here. You break out, you pull back. This is a structured trade. Right here. You get the IB continuation trade. You got to get risk neutral. Now, what I was telling you was I'd be out of the short, right? This is another short in the TraderLab. But I'd be done with my trade. But this is called the IB continuation trade. The structured trade. It's in those 60 PDFs. So you get risk neutral. You got to be risk neutral. Your stop would stay here. This is nice because the buyers are under the bus right here. Then you're just hanging out. And here's what's going to happen. We're either going to come up here and come back here, or continue south to the next target, which is this. Now, if you're asking me to tell you what will happen, I don't know. Neither do you. So the beauty of trading is to release yourself for needing to know. Very hard for us to do because we are afraid. We have fear. And our fear is what's going to happen. Can we figure out a way to be more certain? If we're more certain, we're going to have more confidence. How do you create certainty in randomness? It's statistics. It's not this trade, because this trade might get here, or it might get there, may never get there, or it may never get here, right? What's it going to do? How about, I don't know. So structured trading tells me short from out there to the session close, this, I mean, the settlement, then IB continuation is a short to there. Not a recommendation. That's trading in fractals, and that's TraderLab. So we'll see. Write that down, 5505-ish. Remember, no precision in trading. Horseshoes, hand grenades. Questions, guys? Please give a thumb up, by the way, if you're in YouTube. Yeah, Cocobolo, we do have the IB continuation short. I guess I answered your question. It's here. This could be a short here, but you got to get risk neutral, because yesterday's low is important. You're going to get profit taking ahead of yesterday's low. That's kind of normal. So it's just the nature of things. Previous highs, previous lows, you get responses there. Because we could come down. If it was too low yesterday, you're going to get profit taking ahead of it. So what you're doing is you're either short here, short here. You got to cover your risk to where the trade fails, which is up here. You got to be scaling ahead of this. And then if you get under this, this is your next target. And if you get under this, you're going here, but that's neither here nor there. So these are our targets. Well, take out yesterday's low. That would be enjoyable. Get here, 5505, and then 5490. Those are the targets I have. Are you guys tracking? How is this? You getting something from this? Please give a thumb up if you're in YouTube. Helps the stream. There's a link in the bottom of YouTube. If you haven't visited the TraderLab, it is an open community. TraderLab chat. There's a lot going on in there, a lot of interaction. And our senior trader has over 50 years trading. I'm going on 45, both professionally and now as a retail trader. And but it's not about me. It's really all about you. The beauty of TraderLab is we all come together and we bring our methodology. And it's not to poke holes in anybody's methodology, but it's to help traders see what works, what doesn't. And what works for you might not work for somebody else. The other part is what you think works for you might not really be working. You don't know that until you have a process to vet these ideas. I've had so many ideas and I've used so many tools over the years and spent years on different ideas, not weeks, not months, years. And then only to throw them away. And when you invest yourself into a belief system, it's very hard to change your beliefs because you think it works. Well, part of it is randomness. Everything works. You could just throw a pie against the wall or spaghetti, and if it sticks, yeah, spaghetti is great glue. It's good for putting up plasterboard. Why? Because things stick the spaghetti on the wall. But it's probably not a long-term solution, and it's probably random as far as how long it holds the plasterboard. So for me, I had to keep removing things, and that was hard to do. I mean, there's things I had on my chart or charts. I started in 1980, so there's a lot of stuff that evolved and developed over the years that I had to remove. And some of it was kind of like an old friend. But sometimes you got to break up. Any final questions? Please give a thumb up. If you're interested in the TraderLab, you want to download the 60 PDFs, visit the Bookmap Discord TraderLab community. There is no cost to be part of this community. And ask, if you come to TraderLab, just ask in the TraderLab. What do they recommend would be where to start? If they were going to start over again in TraderLab, what would they do differently? Because everybody has an idea and then there's reality. You can leverage other traders' experiences. You don't need to do this in a vacuum. It doesn't work in a vacuum. You can spend many years going down dead ends, but you won't know it because everything works randomly. but does it have an edge? That's what the TraderLab is built on. Edge. Do you have an edge? Come to TraderLab. Maybe you can improve what you're doing and go on your merry way with something more than you have today. Please give a thumb up. And remember, these streams are available exclusively Bookmap Discord TraderLab participants to review, reverse engineer, to screenshot, circles, arrows, and the rest of it. It's available for 24 hours. By the way, here's what the structured trades look like. Give you a quick peek at those. You can download those. You're in YouTube. Use the link at the bottom. Bring you over to TraderLab. Doesn't cost anything for all these resources. Explanations, what's going on, why, And you can see the actual trades. Some of these are actual trades. Some of them are screenshots, You can kind of do your thing with these. And then pick one, reverse engineer it, and make it your own. Once you understand one, you will have built a process. Once you understand process, you can replicate it with more structured trading, more setups as you think of them. Thanks again, guys. Thanks for visiting TraderLab. Hit the thumb up on the way out, and I look forward to seeing you guys tomorrow.